All right, if you're waiting for the market to heat up this summer, I've got some news for you. It's already peaked and it's cooling off fast. Nationally, inventory is rising, buyers are backing off, and price cuts are climbing. Hang around, I'll break down exactly what's happening across the country right now and why this matters to you if you're thinking of buying or selling anytime soon. You might have heard someone say it's a buyer's market right now, and according to Redfin, they've confirmed that it is. And they're proving it with receipts. There are now nearly 500,000 more sellers than buyers across the US housing market. That's the biggest gap in over a decade. So what does this mean for us here in San Diego? Stick around as I put this into context and what it means for us here. This and more covered in this week's San Diego Market Matters, and I'm Karl Kyler, your San Diego Realtor. If you're enjoying the updates in these weekly market reports, be sure to like and subscribe to my channel so you can stay up to date on what's happening in the real estate market. And if you're thinking of buying or selling here in San Diego, I have my contact info in the description below. Let's connect and see how we can make your next move happen for you. Now, let's get into the good stuff. Your quick market update, standard news as usual, tariffs, stocks, bonds, and the national deficit. So let me spare you the details and get straight to the peas and carrots here. PCE, the metric the Federal Reserve uses to measure inflation, AKA personal consumption expenditures. Well, that reported some really good numbers this last week. March PCE was 2.3%. The expectation for April was 2.2, but it came in at 2.1. Interestingly though, this didn't have much of an effect on the markets. Regardless, GDP was revised from negative 0.3% to negative 0.2%, so nothing too significant there. Unemployment is still at 4.2%, and this will update on Friday when we get the new data in. To recap, the Federal Reserve's mandate is 2% inflation while maximizing employment. Looks like they've done a pretty damn good job of getting us there. But despite inflation trending down and unemployment stable, it's still not expected that the Federal Reserve will cut the Fed funds rate at the next meeting just 2 weeks away. Why? Tariffs, simple as that. They don't know how impacting tariffs will be on inflation, so they're playing their cards close to their chest before making a decision to cut. They want to see more data on the impact of tariffs on inflation before they decide anything. Now, let's dive into the national numbers and trends for the real estate market to see what's ahead of us. What we're going to cover next, though it could feel like a gut check to many, is a good sign economically. The real estate market has propped up inflation for a long time. So let's dive into this. Well, we're here. The spring market is officially in the rearview mirror, and if you're a seller still hoping for those spring prices, this next part is going to sting. According to Altos research, we're now firmly in the summer market, and nationally, that means a few things. Inventory is going up, buyer activity is cooling down, and pricing power is starting to shift. Let's walk through exactly what's happening. Inventory is climbing fast. As of mid-May, there were about 787,000 single-family homes on the market nationwide. That's 32% higher than this time last year. We never hit 800,000 homes on the market last year, but we're about to break that by the end of May. The last time we saw this level of inventory was back in 2019, the last normal market. New listings are also on the rise. Nationally, we had over 83,000 new single-family listings last week, one of the highest weekly counts we've seen in years. This is peak new listing season, and it's going to keep going this way for a couple more months. And there's sellers out there still chasing the May pricing, but they're doing it in the June conditions. This just doesn't make sense. This naturally leads us into price reductions. Right now, nationally, 38% of active listings have had a price cut. That's above the typical 33% we see before homes sell and significantly higher than this time last year. This isn't because inventory suddenly flooded the market. Nationally, we're still below pre-pandemic levels. The issue is that buyers are thinning out, especially in affordability-strained markets. Sellers have to start realizing that their May price tag isn't gonna fly as we move into June, where there's more and more inventory. Pending home sales are hanging on for now. Nationally, weekly pending sales hit 72,000, a decent number and slightly ahead of last year. This is expected though. With more homes for sale, more sales will happen. Total pending sales are around 414,000, but this is the ceiling, not the floor. Historically, this time of the year marks the peak. From here on out, expect those numbers to gradually slide down through the rest of summer and into fall. There could be one more week of peak pending sales, but it's really unlikely considering everything that's going on in the markets. Why is demand softening and not keeping up with new inventory coming to market? Simple. Mortgage rates are still stuck around 7%. Until we can get closer to 6%, buyers are going to stay picky, hesitant, and stretched thin. And let's not forget, summer is vacation time, school's out, people are traveling, and housing takes a back seat. This is what regularly happens every year. Well, new construction is trying to help. New home sales ticked up in April, about 10% from March, but builder sentiment is still cautious. There's over 8 months of supply for new homes, which puts us into buyer's market territory. And for the first time in a long time, the median price for a new home is lower than existing homes, $407,000 versus $414,000. That tells you builders are feeling the affordability crunch too. They're pricing more aggressively, throwing incentives to get deals done, and doing everything they can to offload inventory from their books. So what does this mean if you're looking to buy or sell? If you're a seller, your timing is everything. The best pricing of the year has already happened. Those April and May comps are from deals that got locked up 30 to 60 days ago. Listing now means competing against rising inventory, price cuts, and fewer buyers. If you want to sell, be aggressive. Otherwise, you'll only be chasing the market, literally and figuratively. Now, if you're a buyer, the leverage is starting to tip in your way. More listings, more price cuts, and sellers getting a little more realistic. It's not a buyer free for all, but it's certainly better than we've seen in the last few years. Now, while talking about markets, let's shift to the data recently reported by Redfin about the buyer's market shift. First, let's rewind for a second. During the pandemic boom, housing demand exploded. Low interest rates, stimulus checks, and remote work created the perfect storm for buying. People moved, they upsized, they bought like crazy. In April of 2022, as per Redfin's findings, there were over 430,000 more buyers than sellers across the US. Now, Redfin is saying that script has flipped, and it's flipped hard. According to Redfin, as of April 2025, there are nearly 490,000 more sellers than buyers nationwide. That's the largest buyer-seller gap we've seen in over a decade. That alone is a huge shift, but it's what's underneath that number that matters most. This isn't about panic or collapse, it's about power. And right now, buyers have more of it. Let's look at the data. 31 out of the top 50 metro areas in Redfin's report are currently in a buyer's market. That includes places like Austin, Dallas, Phoenix, Tampa, and closest to home, Los Angeles. These are cities where sellers outnumber buyers by significant margin. In some cases, double or even triple the number of buyers. In Miami, there's 198% more sellers than buyers, which is absolutely wild to even imagine. But what about San Diego? We're still technically a buyer's market, but barely. The difference between buyers and sellers here is only 14%. That's one of the smallest gaps in the country right now, which tells you two things. Inventory is rising, yes, but demand here is still holding up better than most of the country. Now, let's not overstate it. This doesn't mean San Diego buyers are running the table. At the moment, all it means is that balance between buyers and sellers is starting to shift. In the pandemic years, buyers had almost zero leverage. Every offer felt like a bidding war and sellers were calling every shot. But now, with fewer buyers actively in the market, homes are sitting longer, price cuts are becoming more and more common, and sellers are having to reset their expectations. And I'll say this as someone working in the market every day, a lot of sellers haven't gotten the memo yet. They're still holding on, thinking that their home is the exception. But unless you've got something truly special, you're gonna need to adjust because buyers are being more selective. They have more time, more choices, and they're not rushing into offers like they used to. Nationwide, this softening is most noticeable in the Sun Belt, Texas, Florida, and Arizona, where inventory is already past pre-pandemic levels. These areas experienced massive amounts of new construction over the last 5 years. Now, builders are cutting prices, offering incentives, and competing hard for buyers. That's dragging the real estate market down with it. But here in San Diego, our inventory is way below where it was before the pandemic. We've got less than 6,000 active listings right now. Before COVID, that number was over 10,000. So even though our market is softening, we're still dealing with a supply shortage that puts a floor under prices, at least for now. What's really impacting our market here is affordability. With interest rates sitting around 7%, buyers are pushed to their financial limits when qualifying. And this isn't taking into account the impending homeowners insurance hikes. So here's what this means for you. If you're selling, you need to price realistically. This isn't 2021 or 2022. Overpricing will get you stale on the market. And that has a heavy impact on your buyer's perception of your home. Buyers can't help but wonder one of two things. Either there's something wrong with your home or,
This home has been on the market for a while. Let's make them a lowball offer.
Now, if you're buying, you've got some more leverage, just like what we talked about in the previous topic. Use it, look for motivated sellers, negotiate, ask for credits or rate buydowns. At the same time, understand that here in San Diego, sellers aren't having to give up everything quite yet. Still ask, just set your expectations appropriately. So what are your thoughts on this data? Do you think that this is only the start of an emerging buyer's market, or will this be short-lived? Let me know your thoughts in the comments below. And that's a wrap for this week's San Diego Market Matters. I want to thank you for watching, liking my videos, and subscribing to my channel. I'm a small channel and I just broke 300 subscribers this last week. So thank you, thank you, thank you. I'll continue to bring you quality content relative to San Diego. If there's any topic you want covered specifically, let me know in the comments below. And if you haven't subscribed yet, it'd be great to have you on board now. But if you're still not sure, no worries. I appreciate you watching nonetheless. Hopefully, I'll catch your interest with one of my other videos. As always, I'm Karl Kyler, your San Diego Realtor. I'll see you next video.